Welcome, everyone, to Planet MicroCap. I'm your host, Robert Kraft, and joining me today is Cameron Watt, President and CEO of Intouch Insight. It's a publicly traded company. I got two symbols for you, INX on the TSX Venture and INXSF on the OTCQX. And Intouch Insight will be presenting at our upcoming Planet MicroCap Showcase Vegas, happening April 25 through 27, 2023. For more information, please go to planetmicrocapshowcase.com. With that, Cameron, good to see you, man, and I'll be seeing you soon.
Yeah, good to see you, and it's great once again to be able to actually, go places, to see people in person and have a live event. I think that's something we took for granted 5 years ago, so it's great to be out there again this year.
That's for dang sure. I think we're all still just feeding the glow from wanting to be in person. That's for sure. So last time we actually did an interview together, though, we published that on December 2nd, 2021. It's been a minute.
It's been a while.
Yeah, it's been a minute. We got a lot to cover. So I figured let's start off with those that don't know the Intouch story. Give us that quick overview of the company, and then we'll get into some of the updates and all that kind of stuff.
Yeah, sure. Look, at our core, we're a data capture company. We collect information out in the world. We funnel it back to our clients to help them drive better business outcomes. Our specialties are around customer experience management, and we also have some offshoots around compliance management and some event marketing. But fundamentally, we're a data capture company. We did a one-time project last year that was a couple $1 million, and it was using LiDAR technology to just go and collect data for a customer. So, ultimately, we're all about data capture and analytics. We have services, we have software. All of our software, including our checklists operationally and our survey products and our analytics suites and BI tools, they're all written in-house. We do it all here. All the developers are based in our company. They're not overseas. So yeah, we're kind of a bit of a mismatch of services and software, but really it's all about data capture.
Very good. So actually, even in between the last update that we did, I want to direct everybody to go and check out the fireside Q&A that you and Maj did at our conference that we did last year, which is what you're going to be doing this year again as part of Maj Suedon's from Geo Investing, his top tier track. So I'm really excited about watching that. But aside from folks going to check out last year's thing, because that was a nice in between update from the last time we chatted and what we're talking about today. Can you give us that full update? What would you say are some of the highlights from 2022?
2022 was a fantastic year for us. We, of course, I haven't reported anything except Q3 at this point. But looking into Q3, we have forecasted to the markets a 40 to 50%, so called 45% growth. We had almost 2 million in EBITDA in 3 quarters, 1.8. We had absorbed the acquisition of the fall of 2021 of C-Level, and we don't have any debt on the books. Post acquisition, we've been able to absorb it. And when you look at the software, it's very encouraging. We're looking at well over 100,000 in MRR that we were reporting. And if you look at the trend over the last 5 years, I mean, it's a straight line up and to the right. Now our software, our SaaS-based software story gets buried in the size of our services revenue. But if you peel back the onion, it's continued to do well. It grew through the pandemic and it grew strong again last year. We're now 75% of our revenues are driven in the United States. So it's things. We had a solid year. We kept all our employees, through the pandemic and through 2022 that we wanted to keep. And so no, we're feeling pretty good about where we came through. Like everybody, I think we wish the media would stop, trying to force a recession into 2023. But 2022 is a good year.
Not me. I promise.
No.
Oh, okay, good. Well,
other media, not you media, more like the other media, not you.
Oh, good. Okay, just making sure. So Cameron, speaking to all the milestones and the highlights that you just gave for 2022, I mean, did you really accomplish all the goals that you really set out for the company for this year or the past year?
Honestly, we did. We always have a certain number of top-level goals that we set at the beginning of the year, and we actually hit every single one last year in terms of what we were trying to achieve during the year. So, just really, really happy and pleased with how 2022 turned out.
Absolutely. I mean, look, I only asked that because, at this point, I've been doing this so long, people have an archive of how often we've talked, so they want to be like, all right, he said he was going to do this. I just want to hear that. Okay, you did it. All right, good. So now looking ahead, we're here. We're recording this on March 8th, 2023. I believe it's a Wednesday.
You're good. It's a Wednesday.
It is, right?
You're solid. Yep.
Solid. Very happy to hear that. So then from what you can tell us, what would you say then are some of the company's value catalysts or goals for 2023?
You know what? When we hit the pandemic, because all of our customers closed their doors, we had to pull back our horns in order to stay positive, in order to come through as strong as we did. We had to stop investment, right? And really our investment prior to that was into SaaS-based software products. So that's where I think the long-term future is for a lot of companies, including ours, in terms of growth and profitability. We stopped all investment for years. Last year, we turned it on a little bit. And I think the difference this year is we're now considering the pandemic well behind us, and we're looking forward. And so the investment into software is going to ramp up. We are going to, now that's obviously going to bring down profitability. But I'm okay with that. We're not going to be EBITDA negative. We're going to make sure we don't have to raise money. We're going to be cash flow positive. But we need to get back to investing in that software growth, because it did well without any investment, just because of word of mouth and sticky, being a sticky product with great brand. Well, if we can get back to investing and get back to pushing that thing and getting that where it needs to go, there's no tail, there's no end to where this thing could go in terms of getting that software growth. Because the software market is billions of dollars in total size, versus the hundreds of millions and the 100 million in the services side, right? So it's clearly our focus has to be, not focused so much on the services growth, but focused on investing and making sure the software growth gets underway. Because every dollar, the margins are just obviously so much larger on SaaS-based products, and ours are so sticky that I think we have to focus there. We're looking forward.
Very good. All right. Well, Cameron, we're there, man. With that, where can our audience go and find more information on Intouch?
Well, IntouchInsight.com is our website. You can learn anything you want to know there. We got lots of material. And of course, you've heard the tickers already. OTCQX, it has it which is INXSF. And we're trading in Canada on the venture under INX.
Very good. And that's Intouch Insight. There's no capital T after the in. It's all lowercase. I've learned
IntouchInsight.com will get you there. You don't even have to do caps right. You just got to spell it right.
Cameron, thank you so much, man. Always a pleasure talking to you, and we'll see you in Vegas.
Thanks. See you soon, Bob.